Now, don't get it twisted. Principal payments are dope and they save you money, but keep in mind you have to make your minimum monthly payment in addition to these principal only payments because the minimum monthly payment includes the interest that is owed and due that month. So if you skip that and only make principal payments, you're going to find yourself behind on your car note. We don't want that. What's up, my people? Welcome back to the channel. My name is Diamond, and a while ago I made a video about principal payments versus extra payments and showing you how you can pay your car loan off faster. And in that video, I received hundreds of comments of people asking me, I get the math, I love what you're saying, you explained it great, awesome, but how do I make a principal payment? How do I do it with my bank? So I wanted to make a quick video just to walk through that process of actually making the principal payment. Now, if you don't know what I'm talking about, then go back, check out that video. It'll explain it. It gives real world examples. It shows the math so you can really understand the power of these principal payments. But how do you make these payments? Now, the truth is, when you make a payment, you have a minimum payment. When you signed up for your loan, you said I'll pay this much for this many months. That's your minimum monthly payment. Now, the truth is, you should be able to make that payment, and then anything extra you pay should automatically be applied to the principal. But here's the trick. Not every institution do it that way. So when you're padding your payment with an extra 20, 50, 100, or even doubling your car payment thinking I'm getting it paid off faster, that may not be the case because the payment has to be applied to the principal if you want to save interest, save money, and save time and get the car paid off faster. So what you want to do in order to make a principal payment is you want to get with your financial institution and see what their policies is. And some institutions make this very easy. It's like I said, some institutions will just automatically do it with anything extra, anything above and beyond the minimum payment, they'll apply to the principal. Other institutions will have an option online where you can make your payment and click a button and say, apply this to the principal. Or they may have it a little more difficult. And the worse the institution, the worse the loan product, the harder it's going to be to make these principal payments. And what I mean by that is I've had stories of people saying that their institution required them to write a check and mail it and put principal payment in the memo line, snail mail it, wait for them to cash it, and then hope that it's applied correctly. That is unacceptable. Okay, it shouldn't be like that. This is a very simple process in the mortgage industry. Principal payments is common, and it's a simple interest loan on a mortgage, just like it is on most of these car loans, unless you signed up for some real rip-off type loan, right? So this is not a complicated process. But some banks just try to make you jump through hoops because you got to remember, if you've seen that other video, you know that you're saving money. And if you're saving money, comment down below who's losing money. The lending institution, the bank, the credit union, whoever you financed it with. So they want you to pay as much interest as possible. And I believe that's why some of these institutions make it so complicated when it don't really have to be that way. So I wish I could just say it's a blanket. I wish I could just say like, hey, this is the vanilla way to do it. This is the blanket way. You can just do this and it works for every institution. But the truth of the matter is that's just not it. That's not the case. So check with your institution. Get them on the phone. Check on their website. Read your loan documentation. See how you can make these principal payments. And whatever their process is, I want you to follow their process. Now, it don't stop there. What I want you to do after you make those payments is you have to verify. So after you make this payment, you have to verify. Here's how you can verify that the payment you made was applied to the principal. When you make the payment and it posts to the account, look and see if the principal balance was reduced by the amount of your payment. If it's not, or if you see interest taken out of that payment, then that was not a principal only payment and you're not going to get the benefits that Miss Principal experienced in that previous video. So you got to get back on the phone with them and make them correct it because it's humans behind this after all. They can make mistakes, right? So you have to be the one, you have to be your own advocate to make sure that you're saving money. It's not the bank's job to help you save money. That's what we're here for. So verify that the payment is correct. Now, don't get it twisted. Principal payments are dope and they save you money, but keep in mind, you have to make your minimum monthly payment in addition to these principal only payments, because the minimum monthly payment includes the interest that is owed and due that month. So if you skip that and only make principal payments, you're going to find yourself behind on your car note. We don't want that. Now, for some of you, you're going to find out that you have signed up for a loan product with an institution that is going to make it almost impossible, if not impossible, because there is a such thing as prepayment penalties and prepaid interest. There are some products out there that can make this process impossible. So, or just very difficult. So if you find yourself in those situations, what I want you to do is find an institution that's going to allow these principal payments, and then go and refinance your product with another institution. Somebody who's not trying to take you to the cleaners and trying to make you spend as much as humanly possible. Because if you're trying to get out of debt, if you're trying to pay your car loan off faster, these are the steps. These are the things that can work. These are not tricks. They're not plays. They're not gimmicks. These are real world situations that can really help you pay off your car loan faster. And I know this because I did it with my car loan, where I paid off a 60-month loan. I'm lying. It wasn't a 60-month loan. I signed up for an 84-month loan, $40,113 with 5.65% interest, I believe it was, with no money down, because I was smart, right? I bought this brand new truck off the lot. Shouldn't have bought. I made a video on that. So I did all that. But the key of the story is I paid that 84-month loan off in like 36 months. So I paid it off super early. I saved a ton in interest, and it was all because I was using the principal payment method. So if you want to learn more about this stuff, you want to get out of debt, you're in the right place. Click subscribe, click like on this video, and please check out my channel and watch some of my previous videos on how to get out of debt faster, because I paid off over $100,000 in 34 months, and you can too. Until next time, my name is Diamond. Peace.